welcome back to this week's market update. Today is Monday, December 22nd, 2025, and we'll jump right in. Stocks sold off through midweek as the unemployment rate hit the highest level in over 4 years, but markets later rebounded on Thursday and Friday, following a pretty tame CPI report and renewed tech optimism after Micron's strong earnings. The Nasdaq Composite led the gains up almost 0.5%, S&P 500 up 0.1% last week, and then the value-heavy Dow Jones Industrial Average down 0.67% last week. Moving into our economic news from last week, it was a pretty important week for economic data as we did get the CPI print as well as the labor market report for the month of November. Inflation came in lower than expected last month following the cancellation of the October CPI report due to the shutdown. Headline CPI rose just shy of 2.7% from a year ago, while core CPI was up 2.6%. Both improved pretty heavily from September's 3% inflation rate, and we'll take a look at some of the drivers in the next slide. Looking by category, grocery prices were up just shy of 2% from a year ago, so that's been improving in that area. Food away from home, however, was up 3.7% from a year ago. Energy prices up 4.2%, mostly driven by an increase in fuel oil, electricity, and utility gas service costs. New vehicles up only 0.6% from a year ago, while used vehicles were up 3.6% from a year ago. And then shelter was up a very mild 3%, and that's been improving for quite some time now. There were some questions over methodology, though, due to, as you can see, the October data missing, as CPI relies on changes over time and requires some additional assumptions by the BLS to estimate the November reading. Some economists, including the New York Fed president, noted that these adjustments may have modestly distorted certain components and potentially understated last month's inflation. So we'll have to see how that irons out in the coming months. If inflation increases, it could be due to just some structural adjustments with the missing month of data. Even with those caveats, markets reacted positively to the report, with the S&P 500 up almost 0.8% on Thursday. Also, last week, a very important jobs report as we had been missing this data for several months now due to the shutdown. We got the unemployment rate and non-farm payroll growth. The unemployment rate unexpectedly ticked up to 4.6% in November, the highest level since 2021. However, this was matched with a better than expected job gains number of 64,000 jobs added during the month. Job gains came from healthcare, construction, and social assistance, while losses were seen in transportation and warehousing and federal government. The mixed signals reflect a rise in the unemployment rate even as total employment increased, and this occurred because more people entered the workforce now actively looking for jobs. So while the economy added these net 64,000 jobs, the larger pool of job seekers pushed the unemployment rate higher during the month. Lastly, average hourly earnings rose 3.5% year over year, modestly outpacing that inflation rate that we just looked at in the last slide. Overall, I'd say the report has a pretty mixed picture, shaped in part by the delayed impacts of the longest federal shutdown in U.S. history. Also, last week we got October retail sales data showing that retail sales were essentially flat in the month. You can see statistically about a 0% change month over month, and this was up 3.5% from a year ago, driven by online shopping, which was up 9%, and food and service places that were up 4.1% from a year ago. Was dragged lower a bit. You can see the drop in auto sales down almost 2% month over month in October there. Overall, though, I would say the report pointed to a pretty stable, uneventful month of consumer activity, but will be especially important to continue monitoring as we see how consumers were spending throughout the holiday season. Last but not least, we did get a bit of a boost to close out Thursday and Friday last week, in part due to pretty strong earnings and guidance from Micron. You can see here earnings were up over 180% from a year ago. Sales were up more than 50% from a year ago. Micron also raised its capital spending outlook and guided to improving margins as pricing conditions continued to strengthen. Micron shares were up almost 11% last week, supporting the tech sector and contributing to the Nasdaq Composite's advance for the week. So that concludes this week's market update. We really appreciate you tuning in. And as we head towards year end, we just want to wish you all a very happy holidays, Merry Christmas, and a happy new year. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.